So you own mutual funds or exchange traded funds in a taxable account, but you've done a great job this year. As difficult as it's been, you've not sold any shares. Well, guess what? You could still get hit with capital gains distributions. And in this video, I'm going to explain why and what you can do about it. Hey, everybody. My name is Rob Berger. This is the Financial Freedom Show, where we talk about investing and retirement and, all things financial freedom. If those topics are of interest to you, I encourage you to subscribe to the channel. I also send out a free newsletter every Sunday morning. You can subscribe to the newsletter with the link below this video. Okay, let's dive right in. I want to begin with why you can get hit with capital gains from a mutual fund or even an exchange traded fund, even if you have never sold any shares this year. And it can happen. And in fact, if it happens to you, it's going to happen this month. So here's the deal. Mutual fund companies are often forced to distribute capital gains. They do it in December typically, even when shareholders have never sold any shares. And the reason is because something has happened that has forced the fund company to sell a significant percentage of the underlying stocks that fund owns. What typically happens is a lot of shareholders sell their mutual funds back to the mutual fund company. They demand their money. When does that happen? Well, typically in a year like 2022, when the stock market's down. Hopefully no one that watches this channel, but a lot of people get scared when the market's down and they, run for the hills and they sell all their shares. Well, the mutual fund company has to come up with the cash to pay them. Now, they do keep some cash on hand typically, but if enough people are trying to sell, they have to sell the underlying stocks that they hold in that fund. They may have some losses from previous years to offset against those gains, but in a tough year like 2022, it may not be enough. They could end up incurring capital gains and they have to distribute it to shareholders. Most funds do that in December. Now, with exchange traded funds, they do have a mechanism whereby they can minimize capital gains distributions. But here's the thing, even an exchange traded fund, particularly in a year like 2022, can be forced to sell enough and in circumstances where, they have capital gains that they distribute to their shareholders as well. I'm going to show you an example of that later in the video. The frustrating thing for me is this. The buy and hold investor, the one that's, stuck to their plan throughout 2022, that's the right thing to do. It's what I've done. I've not sold any shares of the mutual funds or ETFs that we own in a taxable account, yet we could be the one holding the bag because of the shareholders that have sold. We could be the ones stuck with the capital gains. So what we're going to do, I'm going to show you, first of all, how to try to figure out if the funds you own are going to distribute capital gains this month. Then we're going to look at what you can do about it. And then, as I promised, I'm going to show you one example of a very well-known ETF that has a history of distributing capital gains. All right, so let's begin. This is from Vanguard. All I did was Google Vanguard 2022 estimated capital gains, and they are kind enough to put together this sheet with all of their mutual funds. And here, for example, is their famous S&P 500 fund, VFIAX. We've talked a lot about this on the show. And we've got the record date. So shareholders of record of this date are going to end up getting distributions distributed on the 20th. And what they do here is estimated. So these are estimated capital gains. And you can see, good for shareholders of this mutual fund, there aren't going to be any. They do show the dividend income. That's there. The other thing they show, and not all funds do this, but is the estimated QDI. That's qualified dividend income. So in other words, of the $1.67, they're estimating that 98% of that will be qualified dividends, meaning they qualify for long-term capital gains. I will caution you, however, that depending on when you bought your shares, your number could be different than that, and it would get reported by Vanguard or any other fund company to you. So take this with a grain of salt, but still it is relevant because, as you can see, we'll just come down here to the alternative strategies fund, for example. Only 30% of those are going to estimated to be qualified dividends. So in any event, you can go through here and you get an estimate. You can see some funds do have some long-term and short-term capital gains. They tend to be, in this case, these are balanced funds, which is one reason I tend not to hold balanced funds in a taxable account. They're well-known index funds, like up here, in my experience, don't distribute short and long-term capital gains. But in any event, you can look up your fund here and get an estimate. There it is. We can go to Fidelity. It did the same thing, and I'll leave links to all of these below the video, but you've got sort of the same thing, short-term, long-term capital gains. Keep in mind that the number itself is not as meaningful as what percent of the value of the per share of the fund. And so they'll come over here, they give you percent of NAV. And this is actually probably a more meaningful number because it'll tell you, okay, if I've got 100,000 in this fund, about 4,200 of it is going to be hit with, in this case, short and long-term, or I guess long-term capital gains. They didn't have any short-term. So it's this percent of NAV, and Vanguard does the same thing over here. That's something to pay attention to. And then finally, I'll mention Schwab. They show here their mutual funds. Some of them, are paying some capital gains, not all of them. They also show their ETFs. I actually looked up SCHD, a fund that we talk about a lot here. I own that fund, not in a taxable account, but still happy to see no capital gains distributions are being estimated. So you can, ahead of time, get an estimate of what the capital gains are going to be for funds that you own. And if you want to avoid them, you can sell your shares before the date when shareholders of record are going to get hit with those capital gains. Now, of course, before you do that, you want to think through the tax implications of selling. You don't want to sell shares at a large gain that itself triggers capital gain taxes just to avoid maybe a smaller distribution of capital gains from the fund itself. So you've got to think through the tax implications of your decision, but at least with the kind of information I've shown you, you'll be able to at least make an informed decision. Now, I promised you I'd show you an ETF that's distributed capital gains, so let's do that. Here we go. ARK, well-known fund. By the way, it's a one-star fund according to Morningstar. 2 years ago, Morningstar had it as a 5-star fund, so that gives you a sense as to the value of the star ratings. It's not very valuable at all. In any event, not what this video is about. We can see all the blue here. It's been distributing capital gains at least since 2017. Again, the bar, it doesn't tell you everything you need to know. You need to know what percent of the fund at that time was represented by this. But here's the real key. I've tried to figure out what ARK's estimated capital gains distributions are for this year, and I can't find it. As far as I can tell, they have not released that information. Now, if I find it, I will leave it as a link to a comment pinned at the top below this video. If you come across it, please leave a comment below the video and let us know. Again, I will include links to the Vanguard, Fidelity, and Schwab information below this video. But the real takeaway is, just because you haven't sold shares of an ETF or mutual fund doesn't mean, again, if it's in a taxable account, doesn't mean that you won't get hit with capital gains. So you need to be aware of that and potentially take steps to avoid it, again, depending on your specific circumstances. Hope this has been helpful. If you have any questions, leave them in the comments below. I'll do my best to help you out any way I can. And until next time, remember, the best thing money can buy is financial freedom.